Hey everyone, it's Nick with Us vs. Herd. Today we're going to be taking a look at trading options on Robinhood. This is just going to be a review, kind of give you a comparison of what the options are like on here, what some of the things mean on the app, and kind of compare it. I'll pull up tastyworks and I'll pull up thinkorswim just so you can have something to compare it to. A lot of people that I know that have Robinhood have never traded options before, and this is a new thing to Robinhood, and it's a bit confusing. Mainly because options are not simple. They're pretty complicated in terms of the way that you lose money or make money. And Robinhood, they try to have a fancy interface, make it really streamlined, make it very easy for people to buy, sell, take a look at how much money they have. They wanted to make it as easy as possible. However, in terms of the options, we'll get to it in a minute, but in terms of the options, they may have simplified it a little bit too much. But let me just show you real quick. Some people have approval for options, some don't. Filming this video, the market's actually closed today. So I'm just going to, I'll show you what placing an order looks like, but nothing's going to be going through because the market is currently closed. So let's go. It pretty much looks the same. These are the stocks that I own. Here's some of the stuff that I watch on the watch list, but let's go to Apple. You'll now see that you have this trade button down here in the bottom right. When you click it, you can either buy the stock, which is the buy, or trade options on it. When you trade options, you get this screen that has what is known as their option chain. And Robinhood's option chain looks completely different than anybody else's option chain. I'll pull up a typical option chain right now on thinkorswim, and it's pretty much the same thing on, we'll pull up Apple just so we're looking at the same thing. It's pretty much the same thing on the mobile app, so I won't pull up the mobile apps so I can keep them together here. So this is the option chain. It has the dates, and like Robinhood, you see the dates are up here. Pretty much the same thing. However, we have April 6th highlighted here, so if we take a look at April 6th, this is a typical option chain where you have the calls here on the left and the puts here on the right. And on Robinhood, we have, the option to buy a call. So these things need to be selected up here, so we can either buy a call or we can select this one to buy the put, and it'll go to the put side. So this is a little bit different. I know they were trying to keep screen real estate, but their interface, like I said, is completely different than anybody else's. Oops. But we'll just stick with the calls now because it's the easiest thing to kind of wrap your head around. They have here the share price is 168.17. And these are the options for them. So if you're looking at if you're looking at the calls here, you can see that the price for the stock is 168.17. So then the calls that are in the money are below. So you can see this. The calls that are out of the money are up top. So if you're not sure what that means, I'm not going to really go into detail because this is kind of a review of options. But basically, if it's in the money, that means the options in the money means for the calls, the stock is above the option price. So these 167.50 calls are in the money because the stock is now 168.17. The 170 call is out of the money because it's below, it's above this 168.17 here. So 167.50 is in the money because it's below the share price. 170 calls out of the money because it's above the share price. It hasn't hit it yet. So, typically when you buy call options, you buy options for where you think the price is going to go by the expiration date. So basically, if you think that, let's say by April 20th, like 2 weeks from now, that the option is going to be above 170, then you would buy the 170 call. However, it gets a little bit more complicated to that because there's premiums and all that, and I'll kind of show you that. So it's not as highlighted here. As you can see on thinkorswim, it highlights it here. So on the call side, things that are highlighted in yellow are in the money. Things that are highlighted in white are out of the money. So that's a nice visual thing for you to look at when you're looking at Robinhood. You just kind of have to remember the ones below the share price here are in the money. The ones above the share price are out of the money. So if you look at the expirations, you can see another thing is you see that there's $1.68 here. Let's just kind of break this down a little bit. Let's just take a look at these 170 calls if you were gonna buy them. So the $1.68, this is the premium that it costs you to buy this option. So when you buy an option, an option contract gives you the right to buy 100 shares of Apple at the option price, at, in this case, the 170 call if I was going to buy this one. So on expiration, if we're in the money, let's say next week Apple had amazing earnings and it went up to $185, I would have the right to, even though Apple's stock price was $185, I would still have the right to buy Apple at the $170 call. At the $170 stock price. So that's the contract. So you pay a premium for yourself to give you the right. Now most people, they usually don't exercise that. Pretty much what most people do is just trade the option price, unless you really want to hold the stock long term. If you can afford 100 shares of Apple at $170, go for it. But basically, we pretty much just trade the option prices. And the way that this works here, so you can see they're saying your break-even price is $171.68. So Robinhood saying in order to break even in this trade, you have to go to 107. The stock price or share price has to go to 171.68. And how they get that is they're adding up the premium that you pay plus the stock price needs to be 170. So 170 plus 168, your break even is 171.68. So when it says in order to break even, the stock has to move 2.08% for it for you to break even on this purchase. I would say that's true, but there's also a lot of other things that how close to expiration is it? There's things called theta decay, and we'll get to that in a second. Also, you're saying, hey, it's only $1.68. That's pretty cheap for me to buy an option. Because one option equals 100 shares, you have to multiply this $1.68 by 100. So you have to pay this option is actually worth $168. So in order to buy this option here, you have to pay $168, and I'll show you that in a second. So if you go to, let's just click on this option here. And you can see one contract equals 100 shares here. And you can see. And the other thing is the limit price here. So Robinhood is giving me the mid price. So the mid price is $1.68. So between 155 and 180. And it's not clear how they come up with that. But if you look at thinkorswim and we look at these 170 calls, you can see the bid and the ask. That's how they make the mid price. So the ask is what people are willing to sell it for. The bid is what people are willing to buy it for. So if I wanted to buy this at the ask, I'd have to hit buy, but you're not getting the mid price here. So you can calculate the mid price, but if I go down here, if you can see here, thinkorswim is calculating the mid price down here being $1.68. So when you price these options with this price here, the 155 is the bid, the 180 is the ask, and they don't tell you that. Now you may not get a fill at the mid price. You may actually say, instead of $1, if you put this order in, you don't get a fill at $1.68, you're gonna have to go to like $1.70 or $1.69. Don't go up crazy. You don't have to go to the ask. Apple's very liquid, so you don't have to worry about that. But let's say I want to buy one contract here. So I'll just give you the $1.68 example here. So now you see, this $1.68, it's going to cost me $168, like I explained to you before. When I click on review here, let's go to another stock. I actually don't have a lot of buying power on here because all my money's invested at $32. Let's actually go to let's go for some cheap options on Snapchat here. And let's look at this $16 call here. I just want to show you this review screen. Oh. Okay, so I just want to show you that at the bottom here, it says, see at the bottom here, it says order summary. You're paying $19 for the right to buy 100 shares of Snap for $16.50 per share by April 6th. If Snap shares aren't $16.50 or higher on April 6th, this option will expire worthless. So kind of what I was saying before, like there's a lot of things going on here. At least Robinhood tells you what your risks are here. So options they do expire, and the closer to expiration they get, and if it's not in the money, the option becomes worthless. If you're in the money, the option is worth something, so you can either sell the option or you can exercise the option and buy 100 shares of, let's say in this case, Snap for $16.50. Now, if you're not sure, let's go back just to that example of Apple, of the 170 call, just so you can keep it uniform here. Now in the upper right, kind of where it gets this number. Now I'm going to tell you where the variables are. So in the upper right hand corner, you get this little graph thing, gives you information regarding this call. And right down here is the Greeks. I'm not going to go too much into detail on this, but the Greeks really impact the price of the option. So the closer you are to expiration, the theta is going to get kicked up, and theta is actually known as time decay. So basically, as time goes and your option is out of the money, your option becomes worth less and less and less. And this is the calculation it uses, on the daily to reduce the option price. But the interesting thing here, it gives you some more information about the option chance. What's your probability of it being profitable? To buy this option, they're saying you have a 28% chance of being profitable upon expiration. And these are just weeklies. Most people, when they buy options, they don't buy them that close. They buy them further out. But let's say, so this $170 call, we'll keep an eye on it. But as you get further out in expiration, let's go a month out to May. This one's now costs $5.83. April 6th, it only costs $1.68. So it's costing like four times more to get the same option, but it's further out. So the reason for that is, let's go here. You have a higher chance of probability of profit because it's further out. Also, the time decay, and you have a lot more time for this option to work out or go above. So, options are very risky if you don't know what you're doing. It's basically gambling if you're not really sure what you're doing. So before you spend any money on options, learn all about options. I'm not going to go into detail about options. I think I gave a little bit too much information on what options are in this video. I really just want to do a review of just the basics of the Robinhood and just kind of take you through it. When you trade options, you have to be very, very, very careful. The other thing is that you can't do here, you kind of have to do them by legs, is like, advanced option strategies, iron condors, vertical spreads, and you can do them in here, but you have to buy them one at a time. So I'd have to buy this long position first, and then I can buy my short position. And, it's not a clean interface. I'll bring up tastyworks to give you an example here of what I mean by that. So let's go to Apple. So this is tastyworks. This is where I do most of my options trading. Most of my options trading, I use tastyworks and thinkorswim. So let's look at Apple May 6th here. I'm sorry, April 6th, and we'll look at this. And this is pretty much the same thing, but this is you got your calls here, you got your puts here. You can see a little bit better. It tells you which way's in the money. Your calls, this way's in the money. Your puts, this way's in the money. If you're not sure, calls are you want to be long, puts mean you want to be short. So the interesting thing about this is that this is really a good tool if you want to be shorter position, or if you already have a long position, and let's say you own stock in Apple, but you're afraid of the downturn. You can actually make money when the stock goes down, or kind of hedge your stock position by buying puts. And but let's go back to the different strategies. There's a lot of different strategies when it comes to options. You can just buy it outright, which I showed you before. There's verticals, there's triangles, there's straddles, iron condors and that kind of thing. The nice thing about tastyworks is, let's say typically I sell short a vertical spread. So let's just do a we'll sell a vertical call spread. I'll hit go here. So I'm right here. I'll hit go, and then it gives me the two legs in here. And the nice thing about that is, like, okay, if you don't like the amount of money that you're getting for it, you can just drag and move it around, or you don't have to even select that. Let's say I want to do it myself. So let's say, okay, I want to be short the 170, but I want to be long the 180. I just tap and select which ones I want, and it tells me how much credit I'm going to get. You can then click on more, and you can go up or down the strike. So if I go up or down, it'll automatically change it for me. If I hit the strikes here, so if I hit down the strikes, it'll move it down. If I hit up, it'll hit it up. If I want this to be wider, if I want it to be the width to be tighter, I'll go like this, and it'll bring it in, hit the widths here. You can see it changes like that. So, you know, in terms of trading on Robinhood, I really think it's just buying and selling puts or calls. Just buying and selling options. It's not really made for this advanced strategies. And if you really want to make money in the market, you need to learn these advanced strategies. I mean, I've made money buying calls and selling calls. I do am selling puts. I do have calls and puts that I have for the long-term holds, but I don't actively day trade them per se. But this gives you a lot of different strategies. If we go back to Robinhood, you know, you don't really have all those strategies, and it's probably because they didn't want to complicate the interface, and it's, you know, it's confusing. So basically right now up front they want to give you, okay, you can buy calls, you can sell calls, you can buy puts, you can sell puts, you can short puts. Obviously you need to have the capital to do short selling on the option itself. And if you don't know anything that I'm talking about right now, you know, definitely go look it up. We have videos on this on our channel. We have basics of options. We have advanced tutorials on iron condors. You know, go check out our channel, subscribe to it, and check it out. But you know, that's the basics and kind of the pitfalls of trading options on Robinhood. You know, I like the interface, nice and clean. However, they left a lot of stuff out in terms of, you know, being, you know, making good decisions when trading options. There's a lot of tools in here that they didn't provide. But if you're looking just to buy calls and buy puts, you know, it's not a bad deal. I mean, obviously it's commission free, so that's nice. Most brokerages charge quite a bit of money. tastyworks is only $1 a contract and $0 to close a trade. TD Ameritrade, E-Trade, all those are a little bit more. They charge like $4.95 or $6.95 to open the trade, and then they charge like 75 cents a contract. So that really adds up. But right now, I think for trading options, and if you're trading a lot of options, go with tastyworks. But in terms of Robinhood, it's just buying and selling calls and puts. They make it easy doing that. But definitely know from seeing like comments on Reddit and stuff, like there's a lot of confusion regarding this. We'll try to make some more videos when the market's open on a tutorial on how to make a good decision trading options on Robinhood, and which one would you pick at a certain stock price, and kind of go about it that way. So let me know if have you made money trading options on Robinhood. Have you lost money? Do you like it? Do you not like it? Leave a comment below. Definitely want to hear what you think about options on Robinhood.